buy the right type of real estate in the right markets for the right price in the right neighborhoods, right? And we check all these boxes, and then we focus on these profit centers.
Well, and there's 4 major profit centers that we're investing in. And so we talked about this a little bit yesterday, but the first one you can see on the screen is net cash flow, which is, okay, so if I buy the property, collect rents, pay all my bills, there's supposed to be leftover money. So that's a positive cash flow. Number 2, Josh, principal reduction. This is where my tenants are living in the house, and because I'm basically saying, you guys pay this thing off. I'm not paying this thing off. You pay this off. There's an ROI that comes from that. Then you have the tax depreciation, which is I get to write this thing off over 27.5 years, get a bunch of tax write-offs. There's an ROI on that. And then there's an ROI on appreciation. If you guys look at all of that across the board, it's like, wait, if I'm getting 2, 3, 4% on cash flow from the money I put in, 4% on principal reduction, 3% on tax savings, and then another 15 to 30% on appreciation. On the low side, I'm targeting that 25%. I don't touch a deal unless we're 25. But then, have we seen deals? Have you already seen deals that I've shown you that earn potentially 30% or 40%? Well, the answer is yes. And this is what, it's weird. 90% of all millionaires make their money in real estate, but financial planners, they are not okay with this. Your CPAs, your accountants, they're like, no, your 401k, your IRA, your money is safer with low ROI. And I'm like, no, look at Warren Buffett. Your money is safer when you have a margin of safety from a higher ROI. That's not what they're looking at. So Tyler, let's look at our 15-year track record. And let's just talk about what happened to your real estate over 15 years.
So I still have all these houses, and I've done exactly what we teach. I own homes in every market that we buy with our partners, and it's had a massive impact on my life. And so I just want to share that a little bit. So here's these 3 houses today that I acquired for just over $1 million. It crashed. They were worth $800,000. Now they're worth over $2 million today, and I've also collected about $700,000 in cash flow over that time frame just from these 3 houses, right? So 3 years after I owned them, it was $865,000. Today it's $2.7 million, almost $2 million swing. But it's because I have time, right? I stayed in the market and I held these assets, and time is your best friend in investing. And what does my portfolio look like now? So this is my long-term rental real estate portfolio, and what's the summary of it, right? It's worth close to $14-15 million. I have over $11 million in equity, total monthly rent. So my real estate business is bringing in almost $40,000 a month, and that goes up 2 to 5% every single year, year over year over year, right? Does my mortgage payment go up? Not necessarily. Sometimes property taxes or insurance go up a little bit, but the rent increases typically outpace that. And what does this all mean in the end? I haven't really done anything special. I would say Chris